All right, good morning, traders. This is Trusted Emmanuel Trustwealth. And this is the second trading day of the week, which is Tuesday, 26th of May, 2026. So, I want to pitch on how to identify some institutional reference points. We'll be looking at just 2 or 3 reference points, how to properly identify some institutional reference points. I think we have about the order block, we have the fair value gap, we have the mitigation block, we have the breaker block, we have the inverse fair value gap, we have the volume imbalance, and so on and so forth. So institutions like the banks, when trading, they tend to leave footprints, making you know what to do in the market, making you know where the market is drawn to at a certain period of time. So it is very, very necessary for you to be able to correctly identify the institutional footprint, the institutional reference point, so you'll be able to capitalize on their movement. So I want to we'll be starting with the order block. So it is a necessity for us to correctly identify what is an order block and how to identify an order block. All right. So I need you to know that an order block is the last. Okay, in a bearish market, another block is a bullish candle that was traded through by a bearish candle. Okay, let's write this down here. An order block. Another block is the last bullish candle that was traded through or engulfed by a strong bearish candle. So this is just the definition of an order block. As if we're looking at an order block in a bearish market. So in a bullish market is just the inverse of it. A bullish order block is a bearish candle that was traded through by a bullish engulfing candle. So it's just an inverse of what an order block is. It's just an inverse depending on the market you are trading. So this is just the basic definition of an order block. So let me draw what we are talking about so you understand. In a bearish market, an order block looks like this. Very, very easy to identify. An order block is a bearish candle. Now in a bearish market if you're looking at our definition, it says that an order block is a bullish candle that was traded through or engulfed by a strong, okay, let me correct this, engulfed by a strong, engulfed by a strong, all right, by a strong bearish candle. So let's assume that this guy here is the bullish candle we are talking about. This guy here is the bullish candle we are talking about, and this bullish candle is the order block. So for this order block to be valid, it has to be traded through by a strong bearish candle to the downside. I don't know if you can see clearly what I'm doing. I'm just trying to draw this. All right, so let me change the color. Let me make this black. So okay, I guess this is it. Let me make it black, more black. Okay, this is it. And let me make this red. All right, this is it. So another block is this guy here, this guy that was traded through by this guy. This is another block for a bearish market scenario. So for a bullish market scenario, you will see an order block like this. It's just an inverse of what it is, just an inverse. A bullish market scenario is just an inverse. So this guy is going to be black now because it's a bullish market. It's going to be black now, and it is traded through by a strong bullish move. Traded through by a strong bullish engulfing candle. Let's change the color of this guy. Yes, okay. Let's make this more thicker. All right. So this is exactly how to spot an order block. You just know that an order block is traded through. It's a small candle that is either traded through for a bullish market and for a bearish market. So this is how to identify an order block. So there are other things that really validate an order block. We'll go into that subsequently. So this is basically how to identify that this is an order block. So for example, let's say we have a bullish market. Remember, we all know that a bullish market is an higher high, higher low, higher low, higher high, higher low, higher high, just about higher low, higher high. And we all know that at some point price will get to an institutional reference point, an internal range liquidity, and react off that range liquidity. Then price will fail to respect this low. In as much as we have a break on market structure here, at some point price might just fail to respect this low and break it. So at this point we'll say we have a change in market structure. I'm not teaching about market structure now. I just want to know how to identify an order block in a price action. So immediately we have a change of market structure. We are expected to see price to retrace into probably the premium level of this range, and give us a failure to swing. This high, we are not expecting this high to take out this high anymore. And after that happens, we start seeing lower low, lower high, all these things. If you use TradingView, you understand what is really happening. So lower high, lower low, thereabout. So this is basically what happens in the market, just like a brief of what is happening in the market. So now, to identify an order block, I need you to understand that an order block leads to a shift in market structure. It leads to a market structure. Alright, please, sorry about that. A call came in. So now, as I was saying, this is just the way market structure moves, and we all know this, that this is, we want to see high. This way market structure moves, and immediately we see a break on market structure. Like, let's call it a shift in market structure. This is a change in character. This is a change in character. Price has changed its character from a higher high to higher low, and price is now giving us a lower low. So we don't want to see this guy take out this high. I want to see this guy respect this high, because this high now has become a strong high, and this is a weak low that should be taken by this same strong high, taken, and that's for that. So to truly identify an order block, remember we said another block for a bearish market now is a bullish candle that was traded through or engulfed by a strong bearish candle. So this is just exactly what it is. In your chart, you will see things like this. You see things like this that was fully traded through. You see things like this. Then you see a little guy here. This little guy that was traded through. So this is exactly what you see. Now, for an order block to be valid, it has to break market structure. That order block has to lead to a break of market structure, and it has to leave behind a fair value gap. We are not looking at fair value gap now. We are just focusing on order block. We are just focusing on order block. So when this happens, when you see things like this, always know that price is going to come back to this order block. Price is going to come back to this order block. Let me reduce the intensity of this. Always know that price is going to come back to this order block and push lower. I need you to understand how to fully identify on an order block in your chart. How to fully identify an order block in your chart. So having this in mind, let's jump into the chart. Alright, this is BTC USD, and I think I'm seeing an example here. There are a lot of things that should make an order block valid. I think I will list them here. Okay, let's list them here. This is it. What makes an order block valid? Number one, we see the order block must lead to a break of structure. The order block must lead to a break of structure. I believe you are seeing what I'm doing. Please don't be confused. This is what we are doing now. Let me shift this to this side So what should make an order block valid? Number one, the order block has to lead to a break of market structure. Then number two, the order block must the order block must have a fair value gap. This is called a fair value gap. Now, the order block must lead to a break of market structure, and the order block must have a fair value gap. This is the two major things that you need to look out for to see or know if an order block is valid. This is the two main things. Okay, let me add this one. Let me add the third thing. Let's change this title to what makes an order block, let me use OB here, valid. Okay, what makes an order block valid? Is number one, the order block must lead to a break of market structure. 16 minutes already. I don't want to make this video long. Number two, the order block must have a fair value gap. And number three, the order block must be fully engulfed. The order block, let me say the OB so that it will be fast. OB must be fully engulfed. The order block must be fully engulfed. So this is basically what we are looking at. These three things: the order block must lead to a break of market structure, the order block must have a fair value gap, the order block must be fully engulfed. So, having these three things in mind, let's jump into the chart. So this is BTC chart, and I'm saying just one example. We are just doing one example, and we are done with this video. Now, as you can see, this is an order block. This is a bearish order block. It's a bullish candle. As you can see, that was traded through by a bearish candle. This guy here is another block, and with our criteria for a valid order block, we say the order block must break market structure. What are you seeing here? We're seeing a break of market structure here. What caused this break of market structure? This order block, after tapping into this is not our concern now, but after tapping into an institutional reference point, a fair value gap, a sweep of liquidity, we had this break on market structure to the downside caused by this order block, this guy here. So if we are to highlight that out, let's highlight that out and let's see what happens later if price return back to that order block. And as you can see, price returned back to the order block. So now the second criteria we want to see if an order block is valid, the order block must lead to a break of market structure, which we have seen. And secondly, the order block Okay, the order block must have a fair value gap. So as you can see, this order block has a fair value gap. This guy, it was already mitigated though, but sometimes if an order is not fully filled up, institutions, they will come back to that zone and pick up their orders. So this is a fair value gap from this candle low high to this candle low, this little guy here. Let me zoom in so see what I'm saying. This is a fair value gap from this candle high to this candle low. This from the left hand side, the right hand side, this candle high, the left hand side, this candle low. This entire gap is a fair value gap. So this order block broke market structure and it has a fair value gap. And the third thing is that the order block must be fully engulfed. The order block must be fully engulfed by the candle that broke it. So this is what we are seeing. This guy fully engulfed this candle, engulfed about 1, 2, 3, 4, engulfed this guy, even broke market structure with it. So this order block is a valid order block. We are expecting price to come back to this guy. So what did we see later in the future? We saw that price after coming down went up, tapped into that fair value gap, did some sort of consolidation. You don't have to worry, you don't have to push price, you just have to wait. And price came back to the order block. You see this guy came back to that order block and we went down. You can also target down to this point, I think, and we went down. So trading with an order block and knowing an order block that is valid is a good strategy that you can work with. You can master this. It's a good strategy. And if you are really, if you know what you're doing, you can catch a lot of trades using just order block in the market. So I hope you find this video helpful. If you do, please, I need you to like this video, comment on it, and follow. Make sure you subscribe to this channel and like this video. See you in our next video. Thank you. Stay safe.